Hello and welcome to the Weekend Investing Daily Bite of 7th of November. So the market was completely euphoric on the previous session, Nifty gaining huge amounts. And today, after 24 hours, the market has come to some sort of realization that nothing changes overnight and the sellers are back and Nifty exactly retracted what it gained yesterday. Other parts of the market, however, still looking much better than what where we were 2 days back. Hang Seng market, Chinese market also gaining. So very surprisingly, uh, the event has happened and now the reversals are happening. So what people were expecting that on Trump's victory, a lot of Chinese and Hang Seng market mayhem may happen. In fact, those two markets were going up right now. So it is very difficult to predict what happens. Most of the times, the news is already baked in, and you only see the reactions post that. One very important announcement I want to make right now is that we will be breaking for some days post today's daily bite session, and we'll resume on 18th November, which is a Monday. Massive shift is happening from private banks to PSU banks in terms of the performance and profitability. Let's look at that and some numbers basis that story in the second half of the video. First, please read the disclaimer and subscribe to the channel if you haven't so far. The markets are doing a flip flop almost on a day-to-day basis. So we had uh, Monday was down day, Tuesday was an up day, and then you had the news. So Wednesday was up, and now we are back to where we were on Tuesday, and not too far from where we were on pre-Diwali day. So 4 or 5 sessions have gone by. In fact, almost 9 or 10 sessions have gone by and we haven't really net moved anywhere. Maybe this is the sort of interim relief that we are getting before the next move happens, and that the next move could be up or down. I don't know. So far, the price action suggests that the up move is very limited. Uh, Otherwise, we would have not given up all the gains of yesterday. Some give up of yesterday's gain was acceptable, but not the entire thing. So now the recent lows, of course, are very, very important going forward. There is, of course, this chance of this head and shoulders pattern getting formed again, and then that will have very deep repercussions. Nifty at minus 1.16 can't really say we are out of the woods, still hanging there by the edge of the seat. Nifty next 50, Nifty Junior also down 1%, but Nifty Junior somehow is not looking as bad as Nifty today. It did break out beyond this consolidation, and today is a pullback. Let's see where we go next. But uh, overall, we haven't gone anywhere since June on Nifty Junior, so it is a sort of a time correction that is happening. Uh, 6 months of no gains is a good time correction. Maybe we'll get another 6 months, but it can't really last for too long like this. Mid caps giving up some of the gains of yesterday. So mid cap is the ideal sort of chart that one would have wanted to see on the Nifty also, that you made euphoric gains yesterday and you gave up some of it in a profit taking bout today. The intermediate trend remains up on the mid caps, although the long term trend remains down. So minus 0.5% on mid caps, and similar sort of setup on small caps, 0.62% down, but the interim trend remains very much up at 17,900 or nearly 18,000. We are hardly a stone's throw from an all-time high, so there is no weakness from that point of view in the small cap market. Bank Nifty continued to to languish on a sideways mode. 51,900 on Bank Nifty, down 0.77%. On the Bank Nifty also, since June, mid-June, we haven't really gone anywhere net. Advanced decline ratio almost reverse of where we were yesterday, 360 declines to 136 advances. FII is back on selling spree, so 4,400 crores of selling on the day when Nifty was going up by 1%. So it shows that the FII buying was not the reason for the Nifty euphoria, while DIIs had pressed in 4,800 crores of buying, and of course retail investors were also buying big on that day. Today's heat map all red. There's hardly any green that you see here. And banking space, mainly private banks. You had Reliance, ITC, Hindustan Lever, Tata Motors, Mahindra, despite great results. Uh, Tech Mahindra, Grasim, Hindalco was really clobbered at -8%. Trent missed the expected numbers, -6%. So some of the big stable names saw some really good drubbing today, and that's also the reason why Nifty was down. You also had in the Nifty Next 50 space, Adani and Sol dropped 10.4%. This is after the MSCI rejig, not including it in the next rebalance, and a lot of upfront running had happened. So this is exactly showing you what kind of games get played in the markets, that market men and people with insider information build positions ahead of MSCI index changes. And once the index does announce the change, they are able to offload easily to newer buyers. But in this case, uh, the miscalculation happened and the stock was not included, and hence the whoever was accumulating that stock had to liquidate the stock. Adani Green, Adani Power all down, Vedanta also down, LTIM down, ABB, DLF, LIC all down. JSW Energy was the only stock that really was shining through. Sectoral trends, no sector gained ground. PSU banks were at 0%. That was the saving grace. Metals, which were doing well till very recently, suddenly collapsing at 2.7% negative. Commodities minus 1.8% negative. And this when Chinese market has started their up journey once again. Pharma down 1.7%, real estate, energy, auto all down more than 1.2%. Really no place to hide as of this session. Metals, after having a few sessions of an upswing, are again trying to come down. So again, it is stuck in a limbo of 10-15% range, and you can see some big cuts on the many names that you see here. Stock spotlight was on ITI. So ITI clocked 14.8% gain today from a recent 210. It has raced up. So not all public sector enterprise stocks are doing badly. And here you can see the lifetime chart of ITI, how it has ranged for a long period between 20 rupees and 100 rupees. And now in the recent run up has gone from 100 or 80 rupees to almost 266 rupees. So let's talk about PSU banks versus private banks now. So there seems to be, since last year, some shift happening here. You can see this chart. This chart is showing you the golden line is that of Nifty private bank index. The blue line is that of Nifty index, and the white line is that of PSU bank index. Now, since the last 20 years, it is a no-brainer that Nifty private banks have done the best amongst all banking between private and the non-private banking, and they have dominated the market in a big, big way. The PSU banks have languished for a long period of time until very, very recently. But there has been sort of a cyclical shift in that recent times. And if we see the same chart in the last 2.5 years, then PSU banks have done almost 2x of what private bank performance has been since June of 2022. So private banks are up 54%, whereas PSU banks are up 2% much, much more than private banks, rather 4x of the private banking space. So year on year, also in collective net profits, PSU banks have delivered 39.3% net profit growth. Maybe it is coming off a smaller base, but private banks overall have delivered only 7.1% profit growth in terms of the comparison of the profit growth. In terms of specific banks, PNB has come out with a blockbuster results of 145% profit growth. Central Bank at 50%, UCO Bank at 50%, Bank of Maharashtra at 50%. So there is something different that is happening at these banks versus the private banks. When we see the private banks, we see tepid growth, 4%, 5%, 14% in case of ICICI and 18% in Axis Bank, and minus 39% decline in Indus Bank, for instance. So we are seeing the performance, the price performance also in the last 3 years. Within the private space, you can see HDFC Bank in last 3 years has delivered only 9% total returns. IndusInd Bank has returned only 8% total returns. Kotak Bank has given 4% total returns, and only one Federal Bank has been able to manage a three-digit return over 3 years. ICICI Bank is also only 63% return over last 3 years. Whereas in the PSU banking names, you are seeing Indian Bank is up 234%, UCO Bank is 228%, Central Bank, Punjab Sindh Bank, Bank of Maharashtra, IOB, Bank of Baroda, PNB, Union Bank, Canara Bank, all have given fantastic three-digit returns in the last 3 years. So the point to note is that results from the quarter are reflecting a strong shift that is continuing to happen. PSBs are leveraging whatever reforms the government is pushing, and the profitability is there to see in terms of the profits and the enhancement in their market share. Um, so the adaptability of your strategy is key. If you have been a weekend investor, you would have noticed we had several of these public sector banks come into the strategies much earlier. In fact, right now, maybe they have moved out also after clocking some gains. So this, thought process that we want to stick only with private or only with this should not be there. As and when the trends are forming, you should be able to shift from one to the other or to other sectors wherever you are finding that the alpha is getting generated. So buy and hold with a fixed bias that I want only this stock to perform uh, may not work all the time. It does work over a long period of time if the base underlying company does well, but then that is also a very difficult journey, and you just don't want end-to-end results. You also want the journey to be smooth and not be a harrowing journey. If there are two ways of reaching from A to B, and one is a enjoyable, smooth journey, and one is a really harrowing journey, which one would you want to take? And that is a question that we need to ask, that if we are finding that our methodologies tell us that for now PSU banks may be doing well, let's shift to PSU banks. Or if at some other point later, if we get a signal that no, private banks are doing better than PSU banks, that we should be shifting there. So this unbiased approach towards the market usually keeps us with the winning parts of the market, and that's how our strategies will beat the markets in the long term. So thank you so much for watching. And as I mentioned in the beginning, we are taking a break from the Daily Bite for a few days, and I will see you back on November the 18th. Have a great first half of the month, and by then I hope the markets also would have taken care of themselves. And I'll see you on 18th then. Thanks. Bye.